For that, let's talk a bit about mid-cap technology. The IT index is leading from the front. The Nifty IT index is up nearly 1.8%. And in that, it's names like Cyient and LTIMindtree which stands out. So today, Morgan Stanley has written a report on Indian IT where on Cyient, there is a double upgrade. So their earlier rating was underweight. By double upgrading it, they've made it straight away to an overweight. So they've bypassed that stage of an equal weight. It's a double upgrade. And the reasons for that is, one, the revenues of Cyient are linked to the aerospace vertical. The aerospace vertical contributes about 18% to Cyient's revenues, and we know the uptick that we are seeing in the airline volumes, etc. All this bodes well. The company is taking steps to improve their margin. And third, there is value unlocking because one of their products, business DLM, has filed a DRHP for a separate IPO, for an IPO listing. So there is value unlocking. And the fourth reason is valuations are cheaper. Cyient trades at 12.6 times forward multiple, while peers are far more expensive. So that's on Cyient and Morgan Stanley's rationale for the double upgrade. On LTIMindtree, it's a single upgrade. So from equal weight, they've now made it overweight, and their target price stands at 5,600. They're saying the recent correction in LTIMindtree was not on the back of revenue estimates or forecasts getting pared down. It was more on account of personnel-related changes. Remember, post the merger, it was Debashish Chatterjee, the CEO of Mindtree, who became the CEO of the combined entity, while Sanjay Jalona, who was earlier the CEO of LTI, he stepped down. So there was some attrition related to that. And that's one of the reasons why, according to Morgan Stanley, the stock was an underperformer. But going ahead, purely on revenues and margins, Morgan Stanley believes that LTIMindtree is very well placed. Look at their margin estimates and how they anticipate margins to improve. 16.1% in FY23, likely to expand by 150 basis points in 2 years. And therefore, they believe there is complete merit in LTIMindtree trading at premium valuations even to large cap peers. So that's about LTIMindtree. The stock is up 4%. Remember, the street is very divided on LTIMindtree post the merger. They don't know which way this is going to swing. But another one which catches your attention today is KPIT Technology. The stock has gone ahead and hit a fresh lifetime high, and this year itself, the stock has gained more than 25%. The reason is, earlier this week, the company announced a large software development mobility program with Honda. And this is going to be a long, program till 2030. So the street is very excited about the prospects of this. Earlier today, we had a chat with Kishore Patil, co-founder of MD and CEO of KPIT Tech, on this Honda tie-up for software-defined mobility. Listen into what they had to say.
We have been working with Honda for last 6-7 years. And basically, we have been involved in terms of working on projects and programs in different areas, including autonomous, etc., connected infotainment, etc. So here, when, as we call, all the OEMs are moving towards software-defined vehicles, or as Honda calls it, software-defined mobility. This program was being undertaken by Honda. They thought that they would need a partner, kind of a long-term partner. They need to make software-defined mobility as a success for Honda. There is no numbers attached to the deal. This is a long-term deal, but I may just, I have said that it's basically 2,000 people plus relationship by 2030. This year, we were expecting about 900 plus engagement. This includes some of the current engagements we have.
All right, that's the word from KPIT.